What is going on, everybody? It's TG here. Thought I'd give you guys a BABA price target update and what I think about Alibaba and why I think that it is time to start talking about it a little bit more in depth, as the rest of the market has kind of given up on this stock entirely, and why this opportunity and this over sell-off could be a great opportunity in the future. I want to go over a bunch of different things, stuff that the company has came out and said, and stuff that analysts have came out and said as well. Before we start though, if you guys like, just hit that subscribe button. It means a ton to me. But I really wanted to break this down because Alibaba has been one of the, if not the worst performing stock, definitely the worst performing mega cap stock in the past 12 months, down over 50 something percent from highs, down about 60% from highs exactly. But the company is showing strong growth, and I think when you look at a price target, it is hard to talk about a short-term price target, especially on something as complex and integral as the Chinese market. So Tai Chi, who's another fellow Baba Bull as well, talked about this in one of his videos and talked about why giving short-term price targets on Alibaba are just, it's hard to do. And I agree. I agree 100%. It's very hard to time this market. It's hard to time any market. And to try to pick a point here and there and try to like trade around with it. Yeah, some people are able to do that, and there's a debate on technical analysis and how effective that is in the markets. But personally, I think that in the end, fundamentals matter the most in the long term. Technical analysis can help you on short-term trades and different trends, macro or microeconomic trends, and different things like that when you're looking at the stock price. But larger global long-term stock movement price, I think, is determined on fundamentals. I mean, is the company making money? Are they growing at a fast rate? What are the risks? What are the downsides? Competition. You look at that in a multitude of different facets, and you get your prediction from there. So I wanted to talk about Alibaba because Alibaba's revenue is increasing at 34% year over year, which is huge for a mega cap company like Alibaba. When you're talking about, 318 million in revenue in 1 year, it's just insane. And you just look at it from a multitude of different things. And another great thing that people don't really talk about is their annual active customers of the Alibaba ecosystem across the world reached approximately 1.18 billion active users, and that is insane. That many. So that's an increase of 45 million from the last 12 months that ended in March 31st. And this includes 912 million consumers in China and 265 million consumers overseas. Again, just you think about that number, 1.2 billion. And you look at the United States that has about 390 million people in it. I mean, it's 3 times the size of the entire United States just in their annual active customers. You have their income that is growing as well at a fast rate. You have so many different things. Net income, which is up 10% year over year, which is huge as well. That's about 7 billion for the net income, which again is huge when you look at how much they're actually making in just profit. I mean, this company is growing huge. And their commerce business as well. Obviously, that's their main commerce business. And June of 2021, China's retail marketplace had 938 million mobile active users. Again, that is just so many. That's a net increase of over 14 million. Little things like that is just incredible. And I think people are honestly sleeping on the fact that this company is growing at a fast rate. The company is making a ton of money, but they're just putting the one word China, and they are essentially counting it out because it's Chinese. And obviously, believe me, there is a lot of risks in China. You have President Xi, who at the snap of his fingers could destroy a company, and he's done that. We've seen that with the private tutoring sector. He destroyed that with the snap of his fingers. I mean, it's a risky investment without a doubt. Investing in China is risky because you are dealing with someone who is so corrupt and evil as President Xi, and it's hard to do. It's hard to invest in that, and I agree, and it could be difficult. I'm in deep. I'm down $75,000 on Baba. I'm not sugarcoating it. It's very difficult to be in, but one of the reasons that I am in is because I see the Chinese economy, and right now, while it is not doing well, and one of the reasons it's sold off hard, you have the Evergrande crisis, you have the debt ceiling crisis, you have a lot of issues going on. But you also have to look at opportunity as well. You have a growing emerging market. You have a business that is growing at an extremely fast rate that is making a ton of money. And you look at it, and the value of it is a lot more than I think. You have the average analyst target of $260 for the next 12 months. The stock's trading at 142 right now, so that's a huge 80% upside. You have the fact that there are a lot of positive catalysts on the way for the stock. One of them is earnings, November 4th. I think that'll be a great catalyst. I mean, people are going to see that this company's making this much money and it's valued at 300 and something billion, yet the company is making over 100 and something billion a year. You look at things like that and it looks good. I mean, last year Alibaba did, was it 26 billion in profit, I believe? Just crazy amounts of money that the company's making. Again, and I compared it to Amazon, and that's hard because Amazon's an American company, Baba's a Chinese company. But Alibaba makes more profit than Amazon. Not a lot of people know that. Alibaba makes more profit than that. And one of the big things is their retail. I mean, they have multiple new retail businesses built on an expanding digital supply chain and increasingly diversified fulfillment services. They're really trying to work on their half-day delivery, their next-day delivery, even 1 hour delivery at some points. And obviously that's expensive, but again, that's going to get more customers using their services as more customers buying on Alibaba, more customers using different moats that Alibaba has. It's very well diversified. It's not just e-commerce, and that's another thing. You look at some of the things, their Kanoe network, which is improving efficiency across the Alibaba ecosystem and logistics industry in China and internationally. And in talking about internationally, 90% year-over-year growth for their Lazada, which is their international e-commerce and logistics. So again, it's growing at a very fast rate. And again, it's just another different moat that they have besides just simple e-commerce. And again, talking about that, one of the biggest ones is cloud computing. And I think that cloud computing is going to be massive. We're already seeing that. And now that the company is actually profitable, just in the June quarter of last year, the cloud computing revenue grew 29% year over year, which is huge, and is making a ton of money, over $2.5 billion in profit from that. And that's going to be huge as that continues to grow. Again, 29% year over year. And the year-on-year growth began to moderate since last quarter, primarily because of a revenue decline from a top cloud industry leader. So going forward, though, the company even said, and I quote, "We believe that our cloud computing revenue will be further diversified across customers, and industries." Now, again, this is a huge growing business, and this is one that is constant. We're seeing this in the U.S. as well with Amazon's AWS, Microsoft, and Google, and how their cloud is just growing up and up and up, and the profits continue to go up and up and up. Is because if they do a good job, the customers stay, and that's consistent free cash flow coming in from those customers. And they have, again, different moats as well, different things like digital and media entertainment, which actually somehow increased 17% year over year, which is always good. And they're continuing to improve their operational efficiency and getting subscriber memberships as well, which resulted in narrowing the losses year over year. So again, subscribers, we see that with Amazon Prime, how crucial that can be. But when I talk about a price target for Alibaba, I'm looking at a couple of things. I'm looking at, what's their PE ratio, what's their cash flow, price to sales, all that stuff like that. Alibaba's been buying up shares at these prices, I hope. They said that they increased their buyback program from 10 billion to 15 billion last quarter. If they continue to buy up these shares now at these low levels, and they have a really good earnings quarter, their earnings per share is going to go through the roof. Because when you talk about earnings per share, you're talking about how much the company is earning per share that is outstanding. If the company's buying back hundreds of thousands of shares and they're making more money, this looks a lot better for the company because they're earning more money per share outstanding, and that helps the company, and that's hard to ignore on earnings quarters, and that's, sends the stock price up usually, or at least it does in the long run. Now, one of the things that I want to talk about is my price target for the price target coming up in January, the new year. and then the year after that. Now, what I personally believe, I think it is going to be a little bit of a bumpy road, but I think that this earnings quarter could be a pivotal turning point. One of the reasons I say that is because last earnings quarter, Alibaba did well on the earnings per share, but they just barely missed the revenue. If Alibaba is able to have a top and bottom line beat, and they go out and say something good, some good news, potentially even increasing those buybacks, because I do think it'd be very smart for Alibaba to use a lot of their free cash, because they have a ton of cash. About 15% of the company is just cash. Almost 70 billion US dollars is just strictly cash. Now, they use some of that cash, some of the profits from this earnings quarter, and they use that to increase maybe from 15 billion to 20 billion for their buyback. That shows extreme optimism in the company and could be a huge driver in earnings per share going forward, especially if the stock price, rebounds to a normal level. So I do think that if earnings are good, I think we could see about $185 to $190 a share by January. But mainly what I'm looking for is December of next year. And I think Alibaba will be about $230 to $250 at that time. Again, granted, President Xi doesn't, snap his fingers and say, screw Baba. But regulation is planning on ending in the next couple of months. They talked about this, about 6 months of regulation. And I think that is going to, settle down. We may have one or two more things that come out. We just saw, was it 2 weeks ago, that Alibaba had to divest 5% of their media assets. Nothing big, but just something small like that. Obviously hurts the company a couple $1 million worth here and there. Not great. But something like that could be a big driving factor when you have, no more of these bad news headlines. You have the PE dropping to like 15, 14. It's going to be very, very hard to ignore. I mean, it's sitting at like a 17, 16 PE right now with growth that is just massive. So it's going to be hard to ignore Alibaba as it continues to make more and more money, and as it continues to drop its PE and its earnings per share goes up. It's going to be very hard for people to ignore this company. So again, I'm thinking by January we're going to see about 175, 180, something around that range, and then hopefully the year after we're in the 230s, 240s, maybe even 250s. I do have some 250 puts sold for January of 2023, so hopefully that will work out and I can, make some good money on that. We're down, 5 figures on them right now, hoping that recovers. We have our spreads for March at 150 strike price. We're hoping that goes good, because if it is above 150 strike price at that date, we'll make about 13,000 more than we have now, because we're already down massive on those. And then we also bought some Leap calls as well, 170 strike price for January 2023. We're hoping Baba can go up some, and then we can use that to hedge and sell some calls on. So a lot on the horizon, obviously very risky, because there's a lot of issues and impacts that are going on in China, a lot of risks. But I'm hoping the worst of the worst is out. I hope it's baked in already. Again, this company is trading at such a cheap multiple and growing at such a fast rate, it's hard to ignore it. If I have to stay with it for a long term, I will. But typically we want to hold this for about a year and then get out before some of these audit deals come out. That one of the acts that Biden signed in, holding foreign companies accountable act. So, we'll see what happens. But I just want to give you guys a little update on everything. Different type of video, just face. Hope that's okay with you guys. But yeah, I just thought we'd talk about this and go over some of the catalysts and issues, and some of the reasons why I'm so bullish, because it's good to reevaluate and really go back into it. It's like, why are you actually in this trade? Why are you investing in this? And I think that it's reassuring to see numbers like this and let the numbers talk rather than the FUD, because it can be hard at times seeing huge losses and be like, what am I doing in this position? Why am I invested in China? And getting reassured that way. But anyways, guys, I hope you guys have a wonderful day. I hope you guys are enjoying your weekend. We had a good weekend overall, and we are excited for the new week. Hopefully a green week in Baba. We'll see, though. Anyways, guys, you have a wonderful day. Hit that subscribe button. Hop in the Discord if you want to talk. Take it easy, guys. Bye.